Chinese demand is at the crux of all the commodity stuff that you see. If you go back to 1980 as an example, China consumed about 5% of the world's metals. Now it's north of 50%. So they really consume more than 50% of copper, tin, lead, zinc, and so on. The same is not the case with food. They consume about 20 roughly percent of the food consumption in the world. They could easily turn that into 50%. The difference between the two 20 years ago was more or less metals and energy. From a command economy perspective, they can do what they want. They can say, go build another road, build another bridge. They can't necessarily say, go consume 400 more calories a day.
Well, it's not that they're saying that, but I take your point that as the middle, as they develop and get wealthier, they'll demand more of that. And in fact, that's driven some deals that we've seen. For pork in the U.S., we've got soybeans kind of at the heart of the trade talks between the U.S. and China as well. So tell us specifically which food commodities you think are poised to outperform and by how much.
Yeah, it's going to be beef and grains. I know a lot of your viewers probably kind of look at that and say, how do I play that? But fertilizer is one way, the individual commodities are another way. And the reason is because China is increasingly turning to importing those food products. The middle class is massive at this point. About 75% of their middle class on top of that is going to be considered middle to upper class in the next 3-4 years. They are consuming, based on the history too, what happens is you tend to consume more proteins, more sugars, and so on. That's higher income type stuff. It tends to push up beef prices, tends to push up just generally the food prices, soy, corn, that kind of thing goes into feed for the beef itself.
When it comes to the metals, John, I'm curious because I get your point in terms of Chinese consumers need to consume, the population is growing, et cetera. But when it comes to the point on the command economy, we are at a point in time where China looks to throw a lot of stimulus behind the economy. So in terms of the hard metal commodities out there plus oil, which do you see as benefiting the most from the super cycle?
Well, it was the metals. So the metals were by far the most impacted area that's out there. That connection has faded, though, because about 10 years ago, in 2010, the 5-year plan that the Chinese put out there said, we want to focus more on the consumer now. We want to be more like the West. As an example today, you hear on this program quite a bit, the U.S., about 70% of our GDP is the consumer. That's not the case in China. It's about 40%. So they're starting to transition. About 10 years ago, it was 30% for China. So they're starting to move to be more like the West. It'll be more food-oriented. Now, energy plays both sides. Energy plays the consumer, and it plays CapEx at the same time. So China today, as an example, they consume about 13 million barrels of oil a day. It was 4 or 5 million barrels just 15 years ago. They're second only to the U.S. So the most impacted area is probably energy, probably oil, versus metals moving forward.
All right, oil, beef, and grains. John, thanks so much.